Welcome to The Bottom Line now, a wrap of the business news of the day. And we start with the number of the day, which is obviously the largest economic contraction on record in South Africa. Let's just look at the details. The economy contracted by a record 51% in the second quarter of the year, so April to June when compared to the earlier quarter. That's when compared to the first 3 months, and it's mainly due to one of the strictest lockdowns in the world that began towards the end of March. The economy all but came to a standstill with only essential services running. The manufacturing sector contracted by a whopping 75%. Mining plunged by 73%. The trade and transport sectors both declined by 68%. Agriculture was deemed essential. It was one of the only sectors to record positive growth. Work from home, that resulted in an increase in some spending, for example, on education, communication and utilities. Let's discuss this incredible figure with Economist Thabi Leoko. Thabi, thank you for being with us as always. This was expected, maybe a little bit worse than expected, but it's still like a punch to the stomach for a country, isn't it?
It's definitely a shocking number, even though we did expect it. We did understand that the pandemic will have a negative impact on economic growth, but we never quite knew the extent of the contraction.
And it's the worst in the world thus far, seemingly. Does that mean maybe we were stricter than we should have been?
We're definitely stricter, and I don't think that we shouldn't have been as strict as we were. I think we were given guidance from the WHO and also from the epidemiologists and virologists in the country. So I wouldn't say that we were a lot more stricter. In other countries that were a lot more lax, they had huge infections and deaths. So it is the price that we paid, less deaths, but a big gap in the economy. The economy has suffered as a consequence of the pandemic and the lockdown.
And what does this mean? So there are predictions being bandied about, up to 3 million jobs lost. And what are we looking at for the entire year? Because let's be clear, this is retrospective data. Right now, the economy has opened up. So hopefully we're in the recovery.
We are in recovery, but let's also remember that consumption behavior has changed. So we are still working from home. We are not going to meetings. We're not going to weddings. We're not participating in activities that we did before the pandemic. So our consumption patterns have changed. Our investment patterns have changed as well. So all these changes will have an impact on our GDP. So we will see a recovery somewhat, but it's going to be a long, hard slog before we get to the numbers that we saw a year or two ago. I think that it's going to take us at least 3-4 years before we can normalize.
And minus 8% for this year, a strong prediction. Does that sound right?
I think that it actually could be worse, a lot worse, because it was around minus 8% before the second quarter number, and the second quarter number was a lot worse than most analysts had expected. So I think that I wouldn't be surprised if we see a negative 10% this year, and then a small recovery next year.
Sure. Thabi, let's talk definitions. There's been 4 quarters of contraction, so that's basically a year. People keep on using the term technical recession. Surely when basically every sector in the country is in the red, we're in a deep, full-blown recession. Nothing technical about it.
Absolutely. Absolutely. We're in a full recession, and I would argue that we are in a depression. Depression does not necessarily mean that you have to be in a recession for longer than 4 quarters. It actually can mean that you have low growth for a protracted period. And that's what we've had in South Africa even before the pandemic.
So if you look at it that way, it's kind of like climbing out of a black hole. Like you say, it'll take a long time, a very laborious task.
Definitely. And it's not impossible to come out of it. But we need coordination. We need to adopt the reforms that we've been talking about over the years. And we need to understand the trade-offs. Not everyone will be happy. We need to also act with urgency. I don't think we're acting with urgency. I think that we're nitpicking at each other's ideas instead of just implementing some of these great ideas that we've had. There's no need to have new ideas. We also have this infrastructure goal that we're trying to achieve, and I know that the market is very excited about it. I think that we need to get it going. Money wants to come to South Africa and invest in some of our infrastructure projects, and we have to roll out infrastructure, and we have to be very honest and clear and have a program so that the market understands that infrastructure will be around and investment opportunities are there for the next 20 years. So we need to be, there are things that we can do that can turn the economy around. I just don't think we're doing them and we're not doing them with urgency.
Well, let's end with that. So this infrastructure plan put forward by government as part of the recovery, building roads, bridges, robots, I don't know, South Africa needs so many things. So you're saying there's a huge opportunity there, but still waiting for the details, and it has been quite a while already.
It has been quite a while, and investment is waiting for the details. So we will start to see growth once we start to break the ground and start working and investing. And you know what, with investment, we need to also be cautious. There's investment that can turn into a consumption, which is a bad investment, and not list, let's say, the Joburg toll gates as a bad investment because it is a consumption right now. And there's investment that is one that will employ and also lead to sustainable growth, and that's the type of investment we need.
All right, thank you very much, Economist Thabi Leoko. So let's recap the figures. The local economy recording a massive contraction as the country continued to battle COVID-19. The economy plunged by 51% when compared to the previous quarter. The contraction broad-based across different sectors, manufacturing, mining, the hardest hit. Let's take a look at some of the details.
Latest GDP figures are a testament to the devastating impact COVID-19 and the lockdown have on the local economy. The second quarter is when the country was at higher levels of lockdown, restricting economic activity. This is the fourth consecutive contraction in GDP.
Looking at the slump of 51% of the economy, which is the highest we can ever know in the history of our country. And indeed, if you refer to recent times, only Q1 of 2009, following the global economic meltdown, had reported a negative 6.1% of growth.
The deep contraction is attributed to the sudden shock that impacted negatively on supply chains and on global demand and exports.
Mainly driven by a sharp hit to investment and, of course, consumer spending. Consumer spending indeed contributed 30% of the 51% drop in GDP. Looking forwards, we do expect to see a rebound in GDP, certainly in the third quarter, driven by statistical base effects. We're looking at about 16% rebound. But of course, to see substantial, faster economic growth will require a significant number of changes in the South African economy.
Some say there are worrying signs that the contraction in GDP for this year could be worse than earlier thought, dragged down also by the renewed load shedding. It is likely the country's unemployment problems will be worse, pushing many into poverty.
Just over 3 million people have claimed UIF payments, and of those 3 million, we expect about over 1 million of those people to have lost their jobs permanently. And with such a lackluster economic growth forecast in the preceding years of 2021, we don't expect the labour market to recover markedly, particularly without significant structural reforms.
There are calls for government to embark on urgent action to turn the economy around.
Government can do a lot to restore confidence, and I think one of the key things there would be dealing with the electricity crisis, because it's not just a problem now, it is a problem in the long run. And I think there the solution would be really to open up that market for competition and to actually take, not just say you're going to do it, but to actually implement the measures and the changes to regulation and legislation to make that possible. possible. And then the second thing they can certainly do is change the rules around the tender system. They've been talking about government employees and elected politicians not being able to do business with government. That's a rule everywhere in the world. It should be a rule here as well, especially given our history with corruption.
Stats SA says gross fixed capital formation, representing fixed investments, decreased by almost 60% during the period. The main contributors to the decrease were construction works, machinery and other equipment. Mosi, SABC News, Johannesburg.
Now, the South African Revenue Services SARS was inundated with personal income tax submissions on the 1st of September. Around 46,000 taxpayers flocked to SARS offices to make their submissions and verify their automated assessment results they received via SMS at the start of the tax season. That's according to panelists at the annual Tax Indaba, which is happening virtually this year.
Frustrations have been mounting among taxpayers over the automated tax assessment process. For the first time this year, taxpayers were issued with a text message informing them of their tax return outcome. However, the innovation came with some teething challenges, which led to a lot of confusion among taxpayers. According to experts at the Tax Indaba, there was a surge in the number of calls from panicking taxpayers querying this year's assessment compared to previous years.
It was always going to be the case. The taxpayers don't understand the nature that the auto assessment wasn't actually an assessed result. It was an automated preemptive result, and if you accept it, you can move forward. So we received massive amounts of panic calls of clients saying, what did you do? What did SARS do? Why are they only getting this much back this year? And that was always going to be the case, I think. We've received similar correspondence or certain reactions in the last 2 years when SARS changed the format of the tax returns. Everyone opened up their tax returns and it wasn't the same as last year and everyone panicked. So not the end of the world and a foreseeable and expected result.
Only 10% of the automated assessments were accepted without editing, while 70% were only accepted after taxpayers had verified the authenticity of the assessment. The Revenue Authority, SARS, has received third-party data submissions from banks, medical schemes, fund administrators for the automated assessment.
What happens when we receive all of this data? That then leads us into the pre-population process. So we take all of the data, the IRP5, medical aid, financial data, which covers the retirement, annuity, tax-free investment and interest income. We receive all of this information and we send it through to what we call a pre-pop engine. Essentially what the pre-pop engine does is it takes each of those records and it takes the demographic data and it matches it to an individual. That individual then has a tax reference number. We ensure that we only provide a pre-populated return if we are certain on the data that we have.
Panelists at the annual Tax Indaba claim the automated assessments have reduced the number of audits. Mbalenhle Mthethwa, SABC News, Johannesburg.
All right, after that massive decline in GDP confirmed today, the rand fell by 1%. It's come back a little bit, but still quite down against the US dollar, although still trading below 17 rand to the dollar. Let's take a look at your main financial indicators. We take a short break now, then sports with Molly. Stay with us.
First, I want to salute the workers, the frontline workers, who are from time to time facing serious challenges.
Our sincere condolences to those workers in private and public who lost their lives in the line of duty.
COVID-19 came, and all of a sudden in our country we realized who are the heroes and heroines of our country.
To the government, they must do what is right. They must provide and protect and defend the frontline workers.
How can you shoot an innocent child that doesn't know nothing? A child that got cerebral palsy, you still shoot him dead with a pump action.
4 of them. They found it like he's standing there.
As you can see his fingerprints here, he slipped down trying to get a grip. And then he fell underneath the truck.
We could see they wanted to cover up this thing. We saw it right there in the police station. They were not even prepared to answer us.
The trust has completely been broken down from the community and members of SABC.
The reality for us at this point is that SABC, unfortunately, has no regard for life in this community.
It's unfortunate that the young man died here. That's the first thing as a South African police would have to avoid.
IPID, we understand that investigations are still underway.